For Americans who want to look into the future, you no longer need a crystal ball or the words of a magical fortune teller. All you have to do is watch what is unfolding in Turkey as this year's economic collapse pushes their already crumbling country into even deeper ruin. If we continue on the path we're on, the mighty United States could very well follow Turkey's lead into total financial collapse. Since 2015, Turkish citizens have watched helplessly as their purchasing power plummets year after year, now sitting at less than half of its previous value. The national currency, the Turkish lira, has dropped sharply against the US dollar and many other major global currencies. Where it once sat at 3 lira for each dollar, that rate has now dipped to a record low of 7.37 lira per dollar. This year alone, the lira plunged a staggering 20%. Turkey's President Recep Tayyip Erdogan made a desperate last-ditch effort in late July to enforce shadow capital control and force funding rates upwards of 1,000%. But even these extreme measures failed. Earlier in the month, Erdogan removed the sitting governor of the central bank, thus leaving himself as the main figure in charge. Despite his grip on both policies and the country's financial systems, he was unable to prevent the lira from collapsing to all-time lows. Still, that hasn't stopped Erdogan from wresting more and more power from other government institutions and consolidating it for himself. Possible foreign investors watch this process with great concern and thus become increasingly wary about dealing with Turkish companies. That is only adding further to the country's currency disaster. At this point, the capital controls put in place by Erdogan, among the strictest in the world, mean that Turkish citizens are heavily discouraged from buying up comparably valuable US dollars that would allow them to build a safety net against the inevitable devaluation of their own national currency. These controls leave the desperate public with very few choices and not much to lose. In this video, we're going to discuss the economic plight in Turkey and the impending collapse of their national currency, which has already lost more than half of its value in the last several years. We'll tell you how this will affect Turkish citizens and look into the economic indicators, why the US is heading down a dangerously similar path to destruction. In recent months, Turks have been snapping up gold left and right. In fact, in a period of only 2 weeks, citizens cashed in their savings and purchased more than $7 billion worth of gold bullion. Those who rushed to the markets found that gold prices were rapidly surging, in one case rising by 1 lira or $0.14 in only 10 minutes. For many Turkish citizens, memories of the 2018 currency crisis were still fresh in their minds. Then, the lira shed 30% of its value almost overnight, instantly pushing millions across the country into deep financial trouble. Now, it is impossible to be too cautious. According to a report by Reuters, during the last week of July and the first 2 weeks of August, local holdings of hard assets such as US dollars and gold skyrocketed to a record high total of almost $220 billion, adding $15 billion in those 3 weeks alone. While the dollar still plays a safe haven role, Turks are leaning away from the US currency, which has also suffered dramatic losses amidst this year's economic collapse. At the same time that Turkey was seeing a rush on gold, the dollar's value was crumbling against gold as the Fed sought to debase the American currency. More gold-buying sprees will surely follow in the weeks ahead, and some citizens are already planning to withdraw their money from banks and use that to add to their precious metal supplies. Already this year, in the period from March to May, Turkish citizens pulled roughly $2 billion in foreign bills from their banks as lockdowns were imposed across the country, and the lira again took a sharp downward turn. Turkey is already heavily reliant on imports, and the national reserves are next to empty after this recent series of heavy-handed market interventions, pushing the country in a very precarious position. It's not entirely unlikely that Erdogan will outlaw gold ownership by Turkish citizens as he attempts to hold on to power even as the systems crumble around him and the population gets poorer and poorer. Of course, as is happening in the United States, both the president and the central bank have been pushing propaganda about how secure the country's financial systems and monetary policies are. They've warned citizens to hold on to lira instead of investing in stronger currencies or tangible assets. But the government mouthpieces aren't being heard. Experts estimate that Turks now hold as many as 5,000 tons of the precious metal in private stockpiles in their homes or other safe hiding spaces. After the recent run on gold, that number is likely much higher. And even though gold prices are at all-time highs against both the dollar and the lira, vendors at major markets across the country have seen few cases in which people want to sell their gold. Buyers are dominating. Some citizens have contemplated selling their most precious belongings, cars, and even houses, in order to put more money into gold, as it appears that the economic situation will only get worse. The increasingly authoritarian stance of the Turkish government has scared off a large portion of foreign investors, who now collectively hold only a minor stake in Turkish assets. Over the last year, many of the foreign funds that propped up Turkey's local currency bonds and stocks have been pulled out. It's up to Erdogan to move local individuals and businesses away from the safety nets of US dollars and gold and back towards the lira. Meanwhile, the government is rapidly losing the ability to control the lira through draconian policies. Instead, ZeroHedge.com writes they're using the bazooka approach, blowing up a short here and there, but ultimately accruing a number of serious long-term consequences that will only condense their timeline to collapse. The country's reserves are dwindling. In 2020, tens of billions of dollars went towards attempts to keep an unofficial currency peg. This move breaks from more than 20 years of policy that allowed a free float. But despite the billions being spent, the lira continued its downward spiral. Furthermore, the health crisis and accompanying global travel bans have brought Turkey's tourism industry, which brings a lot of money into the country, to a halt. Turkey's finance minister, Berat Albayrak, said that the problem went beyond fluctuating exchange rates. The central bank has kept its foreign exchange market interventions going by borrowing on local dollar liquidity, and these moves are supposed to stabilize the national currency. Since last year, the central bank has sold more than $110 billion through state banks across the country, which are short foreign exchange by $12 billion in total. This has caused the central bank's gross forex buffer to drop by almost 50% since the start of the year, plummeting to lower than $47 billion. This marks the lowest figure on record in the last 14 years. Of course, government institutions have denied the horrific collapse in national reserves, blaming the huge shifts on the current global economic climate. While there have been promises that the crisis will ease soon, citizens just aren't buying it anymore. Locals are eager to dump the lira and instead stockpile US dollars and gold. At a time when international cooperation is of utmost importance, Turkey is moving farther and farther away from fellow developing markets. The country's money supply has ballooned, and its foreign exchange reserves have been frittered away at a pace faster than any other major developing economy. Furthermore, there is not a single one of Turkey's peer nations that have a central bank policy rate so out of touch with the real measure of inflation. Even as the pandemic has wrought havoc on developing and developed countries alike, the collapse of the Turkish lira seems entirely the fault of domestic mishandling. According to Bloomberg, research into narrow money growth in 25 of the world's emerging markets revealed that the majority of Asian and Eastern European governments have limited their growth to single digits thus far in 2020. The median increase sits at 10.63%. Turkey, on the other hand, is ballooning at nearly 7 times that rate, with an almost unbelievable 68% increase in their money supply. The central bank has kicked funding costs into high gear as a means to prop up the lira without also pushing the key interest rate higher. When the policy rate is weighed against inflation, Turkey's real yield is lower than 22 other major emerging markets, including Pakistan, India, and Egypt. In fact, the situation has gotten so distant from other comparable countries that analysts are beginning to treat Turkey as a separate case. According to Paul Greer, a money manager at the investment management company Fidelity International, the drop in foreign exchange reserves, as well as the backwards monetary policy, have made Turkey a very unattractive bet for investors. Moreover, the inflation rates within the country are approaching dangerous territory, a fact that's become particularly evident when comparing Turkey to other countries with emerging markets. They haven't seen nearly as extreme shifts in balance of payments or currency values as Turkey this year. Where the Turkish government really gets into trouble is when citizens decide they no longer want to keep their money in state banks. The country has already seen this potential disaster coming. To cut off widespread bank runs before they can spiral out of control, institutions have placed higher than normal fees on cash withdrawals. Moreover, the central bank began to shut down some of the cheap channels to obtain credit that had been put in place as an emergency measure to combat the economic fallout. From the outside, it appears that the interest earned on lira deposits is soaring, as they now compile more than 8.25% policy rate. In reality, however, the return has dipped into the negative as inflation soars to 11.8%. It seems that Erdogan's policy of combating high inflation with lower rates, which flies in the face of typical economic trends and historical outcomes, will lead Turkey to its demise, just as experts have been warning for so long. Still, Erdogan is determined that high rates will further stagnate the economy. The alternative seems to be driving the national currency into the ground. After all, economic prosperity cannot be brought about just because a country's leader demands it, even though politicians around the world seem to believe this is the case. Just what exactly does all of this mean for the average individual in Turkey? Well, a country that's been long accustomed to free trade and travel is facing a stark new version of the world in which their domestic policies are falling apart, their money is less than half the value it was several years ago, and their standards of living are dropping at an alarming rate. Sound familiar? The same exact thing is playing out for the United States as we speak. Disastrous politics, a crumbling currency, and the slide of millions into hunger and poverty. Last week, experts predicted that the next quarter would be even darker for the US dollar. The index has been in the negative for 7 consecutive weeks and dropped over 7% in the last quarter alone. According to a high-level currency analyst at Brown Brothers Harriman's, when thin, the levels will only continue to plummet, and the dollar could hit its lowest point in the last several years by the end of this year. If Americans want to see where they'll be in a few years, look to Turkey and get ready for even lower standards of living than those that we've already slipped down to this year.